All right, here we are. Finally, man, it's taken a while to get it scheduled, but FUJI Money, here we are finally getting a chance to hang with Marco. Okay, that's at Tiero on Twitter. He's an all-star. He's a part of Volpem Ventures. We're going to get into that. We're going to talk about being a Liquid Federation member and maybe Liquid itself. But mainly at the top of this interview, since this is definitely one of the most complicated deals that we have done and the most complex companies we've invested in through Lightning Ventures, we really want to explain a lot here. So for anyone who maybe suffered from the centralized lending collapses that happened, right? We know no real Bitcoiners would ever try to chase yield on one of these platforms. But if you did, you're probably still licking your wounds with those. She has solved this. Now, we got a lot of buzzwords here, right? And I hate these buzzwords, right? We're talking about Bitcoin smart contracts. We're talking about a non-custodial decentralized lending protocol, okay? And no, we're not talking about Ethereum, okay? We're not talking about some other chain. That's what's exciting here, is this stuff is coming to Bitcoin. First off, I want to welcome Marco, say hello, and how are you this morning?
I'm great. Greetings. I'm really excited to be here. Lovely. Looking forward.
All right, we went on a great bike ride here in Miami and an interesting after party evening that followed, but maybe that's for another time. All right, Marco, listen, in your own words, before I get going, why don't you talk a little bit about FUJI, what's happened this 2 years now in the making to get it to this point, and what exactly is this?
Absolutely. Let's go. I think we at FUJI Labs, we are looking to not trust anymore a CEO promising you yield or promising you all this lending platform that we saw in the last 2 years blow up. FUJI actually starts really long time ago. We started researching, being incubated and Volpem Ventures about how to make sure we can use Bitcoin covenants or Bitcoin script in general to offer a decentralized lending solution. We published the paper last year. We said, okay, there is a lot of interest, a lot of traction, so we definitely need to build something on top of it. The idea of FUJI is basically allow anybody to borrow against their Bitcoin on the Liquid network at this moment to get a FUJI USD out of it in a way that you don't need to trust anybody. You can pay back your FUJI USD loan at any time and get back your Bitcoin. This is not something using any escrow or multisig, but all using the power of Bitcoin script smart contracts, let's say. Is live now on Liquid. We launched at the Bitcoin Miami. It's been great. Like in 10 minutes, someone sweep the 5,000 FUJI USD limit we put at the beginning as a first step. And we're being absolutely amazing for me that we did that in just 10 minutes. So yes, we're live. We are looking forward to work on other, I would say, smart contract protocols like from Taro VM or RGB. And the idea is to use all Bitcoin layers as much as we can going forward.
Okay, so first off, what makes this non-custodial?
Yes, using the power of Bitcoin script covenants. The idea is that you lock your Bitcoin inside this address, which looks like a normal Liquid address. But the idea is that to get back your Bitcoin, you need to follow the rules that we both decided when you lock your collateral. So if you lock, for example, $200 worth of Bitcoin, you just need to present and you get issued 100 FUJI USD out of it, let's say. So you have a 200% collateral ratio. You can always go back to the covenant directly with no intervention with us or anybody, really. You just follow the rules of your address and you burn your 100 FUJI USD to get back your 200 worth of Bitcoin out of it. And of course, we cannot do this on Bitcoin main chain yet because we need much more smart contract capabilities. But Liquid, which is a Bitcoin sidechain, there is no shitcoin involved, no token involved. You can use basically Liquid, which is just Bitcoin plus more smart contract capabilities. So we are using a federated model to offer this protocol, which definitely can be replicated on Bitcoin main chain in the future when we are going to have covenants.
Okay, so Covenants is fairly new. Where does the FUSD, right? This is the first Bitcoin backed stable coin in the true sense of the word. Where does that come from? And maybe we can do a live demo in a little bit, but Fuji, in order to access Bitcoin, your pristine collateral that is your Bitcoin, and you don't want to have a taxable implication. You need some short-term cash flow. Maybe you want a YOLO long, maybe your lifestyle, whatever it is, right? You're entitled to that fair lending and not have to subject to the counterparty risk. So if somebody locks $5,000 worth of Bitcoin, or pick a number, right, and that's over collateralized, they receive Fuji USD, right? FUSD. Now, where does that FUSD come from? How does that sort of treasury management work?
Yeah, absolutely. It's of course, very important question. We call this our white paper that came out of 2 years and counting of research. We call them synthetic asset. The idea is that with this system, thanks to an oracle that is just making price signature of price, we can literally create and track any type of asset that doesn't natively exist on the Bitcoin blockchain. We can track that price and create an asset that closely track that price of that oracle. And de facto, this Fuji USD is a synthetic dollar, meaning that there is no other stable coin backing it, but just Bitcoin. So we put down Bitcoin in a covenant that grants you rights to issue on demand, on the spot, when you need it, when you are locking your Bitcoin, to issue your Fuji USD, your synthetic dollar. And whenever someone wants to get back their Bitcoin out of their covenant, they just need to burn, technically they need to burn the Fuji USD, the synthetic dollar. They burn that, and the covenant, self-service, with no interactivity and with no cooperation of anybody, will dispense back your own Bitcoin to your own wallet right away. And this way, the supply of the synthetic dollar, the supply of Fuji USD, is always tracking, is always having much more Bitcoin value on the other side, right? In all this collective Bitcoin address. So again, Fuji USD is issued and burned based on how many collateral is being locked and how many collateral is being taken out. Of course, as being of course the price of Bitcoin volatile compared to the synthetic asset, compared to the dollar, if the value of the Bitcoin of your covenant is going low and saying below 110%, liquidators will be able to liquidate you using the oracle price. This incentive makes the borrower to always keep enough collateral so you can always top up, or you can pay back your loan and you can basically burn early on your Fuji USD to avoid liquidation. And this process is happened without the intervention of any trusted third party. The custody of Bitcoin are directly an address that you control. You just need to follow the rule. You just need to pay back your Fuji USD, and then you can get back your Bitcoin. This contract, this covenant, we call it safe. So it will be a Fuji safe, is where basically your Bitcoin is being locked there.
So let's talk about the potential for yield. Some people out there enjoy lending, and especially if it was in a secure way where you could earn a bit of yield, maybe more than being a payment node operator and the amount of work that goes into maintaining that. How does this work? So lenders earn Bitcoin interest on over collateralized loans. Can you chat about this?
Absolutely. As you can imagine, now we are talking about the borrower side, right? So we are talking how a borrower can basically mint Fuji USD using their Bitcoin collateral. And this, to keep it open, to keep your safe open, you need to pay a minting fee, a recurrent minting fee. This is basically an interest rate. So borrower actually, of course, need to pay the other side, which is the liquidator, which is actually holding some Fuji USD on the other side because he wants to exploit liquidation opportunity if the price of Bitcoin goes down. So you actually need to compensate this liquidator for the amount of Fuji USD, the amount of synthetic dollar they're holding to chase this liquidation opportunity. If you do a little bit of a first principle or a zoom out, you can see how borrowers are usually long Bitcoin, because what they want to do, borrowers, they want to borrow against the protocol, and then they want to instantly buy more Bitcoin. So they want to sell the FUJI USD. So if you think about it, borrowers are people that are long collateral, they are long Bitcoin. And on the other side, you have liquidator instead that they say, hey, if the price of Bitcoin goes down, I will basically confiscate your collateral. And de facto, I'm like looking to buy Bitcoin if the price goes down as a liquidator. I'm basically short collateral, right? But I will earn those Bitcoins. So I'm actually saying, okay, I think Bitcoin price is going down. So I'm putting some FUJI USD exposure on a side. So yeah, my own wallet that I keep my own wallet ready to go. So I'm ready to liquidate if that happens. So that's why we see this as a way to have a very efficient derivative exchange with no order book in the middle, with no matching engine in the middle, but just using the request or the desire of borrower to go in long and the desire of liquidator to go in short to basically create derivative exchange. So this, again, will be on the both sides will be non-custodial, so liquidator don't need to deposit funds or give funds to any other third parties. So that's how, and basically, if you have Bitcoin and you think, okay, I want to have some FUJI USD exposure, I will basically use my Bitcoin to be short a little bit because I think maybe the price going down. Meanwhile, I'm getting paid by the borrower with the interest rate, the minting fee I was mentioning before. So the lender, basically, the liquidator, is basically a lender of Bitcoin that is just saying, okay, I'm getting this FUJI USD exposure, but I want to get paid for this. And the interest rate, the minting fee the borrower is paying to the protocol will go straight to the liquidator.
Okay, somebody on the other end, the lender, let's just use one Bitcoin and let's say it's $30,000 USD. So somebody wants to provide one Bitcoin of borrowing liquidity on the other side, and somebody takes that, right? And maybe is it first off, is it an all or nothing, or does that turn into many different smaller contracts? Is it a pool? But so somebody's providing one Bitcoin liquidity, right? And over collateralized, let's just go with 50%. Okay. So that's 15,000 FUSD. That's 15,000 FUJI USD that would be reserved on the lender side. Now he doesn't have access to that 15,000 USD at that point, right? Maybe it's that's locked in reserve for him.
Exactly. So yeah.
So when that minting fee or that interest rate or that yield that lender is going to be getting, right, either quarterly or monthly, and we can talk about that in a minute. I think it's quarterly, but is that interest rate then immediately available because it's outside the covenant?
Absolutely, exactly. That will be paid with a Lightning invoice. That's the best user experience we can get. You, as a borrower, I just log in my page before the quarter or the month expire. I pay an invoice, a Lightning invoice, and that invoice will basically be the interest being paid that will grant you automatic renewal of your covenant, right? So this is an approach. So you pay a Lightning invoice, very easy, so that you're not touching your BTC. So the BTC the borrower put down is not being touched until he will get back by redeeming, or if liquidation happens, the lender will take the extra collateral that way. But yes, you are paying out of band, out of the protocol, you don't touch it. There might be another version where basically maybe the borrower say, no, don't want to pay recurrent, I want to pay at the end. So basically your contract, when you're going to close it or redeem it, you are going to subtract from the collateral, you're going to subtract the amount of interest that need to be paid. So this will be a choice of the borrower, right? So the borrower can say, okay, I want to pay myself with Lightning every month, every quarter, or I'm going to pay at the end. It will be subtracted by my collateral. That will be a choice of the borrower.
So now on this competitive analysis here, and we love Unchained, all right?
Yes.
And they're also moving into wealth services, IRA, retirement plans, estate planning, other multi-sig. They got MTLs. That's a whole different business, but they're on here. So can you walk us through some of this right here? Now, I love how you put just the lending options that are actually still in business, right? You didn't list the 8 that are no more, but do you want to touch just a hair on each of these 4 kind of pillars that you identified at the top?
I think self-custodial is like being with a Bitcoin audience. I think it's easy to explain. So I think that the fact that we are not an escrow, we are not a part in the system. So you basically interact directly with the covenant, and both parties, borrower and liquidators, interact out by themselves, puts us in a position to just be designer of the protocol, just putting their reference open source implementation. So we are a software company really. So we don't need any license whatsoever. I think just touching the other maybe are like obvious, like Nexo is a centralized basically lender. And Compound, like the problem with Ethereum smart contract is that there is always an admin key and an administrator key, and there is always a way to upgrade this type of smart contract in Ethereum land. So that's why I put, I don't really know if Compound is really self-custodial, because you don't really know hold the path how you can spend your Bitcoin, like in the Bitcoin space or a normal multi-sig, the public key that can spend. Unchained, I'm putting, again, is not fully self-custodial because you basically have the majority of your multi-sig that is not yours. I know is a, I would say, a third party, a mediator or an escrow, but still the escrow and your lender can collude. There is maybe a remote opportunity to do that. They can do it, definitely. In this case, which I think it's fully self-custodial, because as long as you comply with the covenants rule that you decided by yourself when you decide to lock your collateral, I think that's the true self-custodial there. And HODL HODL, which is great, of course, and we can combine FUJI HODL HODL for many, they can be composed together, actually, but I think, again, HODL HODL is an escrow, so there is a little bit of collusion that can happen. Then let's go to liquidity pools, which I think is very important. There is a two different way to do lending. Either you do in an efficient way, in a capital efficient way, but you require custodial, or you require to be custodial. So Nexo is very efficient because, or banks in general are very efficient because they don't need to find the right guy, the right borrower, the right lender at the same time to be there, right? So that's why banks are very efficient. And instead, if you want to be non-custodial, let's say HODL HODL or Unchained, you need an escrow. And this is P2P, right? So you need to find the exact borrower that finds the lender that offer the right terms. Like some lender want to get out in 1 year, another lender want to get out in 3 months, or one lender has different interest rates. So there is no pooling, right? There is no pooling of liquidity happening. And this is very slow to attract liquidity. So you have a trade-off. Either you are non-custodial and P2P at the moment, but you're inefficient in terms of capital, or you're super efficient in terms of capital, like Nexo, but again, you're custodial. You need to trust their CEO to give back your money. So I think this is important to understand the difference between P2P lending and peer-to-peer lending and pooled system. And of course, being non-custodial, we protect from re-hypothecation. That's very important. And Unchained does a great job because, or HODL, because you see in the multisig where your Bitcoin are. So of course, that's something that escrow or multisig or peer-to-peer lending, of course, protects from. So that's absolutely great. And Bitcoin base, I think the other column for me is very important. Anything is super risky. Bitcoin has total legal clarity in Western jurisdiction from US, Switzerland, and so on. So Bitcoin is a commodity. Anything built on top of Bitcoin or inherits the same legal clarity. If I'm building maybe this kind of advanced smart contract liquidity pools on Ethereum, I will not sleep well at night, to be honest, right? So I'm saying, hey, Compound is great as liquidity pools, protects you from re-hypothecation. Let's say someone can do a Compound with no fancy smart contract administrator key, whatever, but still it's built on Ethereum. It's not really a great place to be as a software developer, as a company that wants to offer this kind of crypto-based products. And so I'm saying it's not only because we love Bitcoin and because we are Bitcoin builder, it's not just religion, it's not just because we like, but really there is a definitely competitive advantage in building on Bitcoin right now.
Okay. Man, we're already 20 minutes into this here. I haven't even gotten rolling. All right. So day one, what can you do with FUJI, right? FUSD, kind of launch partners. I know it's in a limited alpha, whatever you want to call it, with very small amounts that were eaten up very quickly. I don't know if you have any updates on that, but what are people going to be able to do with FUSD day one?
Yes, our idea will be First, we listen to our community. We have 500 subscribers already, and I would say 100 of them are super fans of what we are doing, and they really pushing us, and they're like giving us feedback. I think that main use case will be go long on your collateral, right? So you want to go long your Bitcoin, you believe it. Maybe you are not super degen, and you just want to go maybe 2x leverage, right? So what we're going to offer as soon we go out of this limited capital, which by the way, we did it because we don't want to go YOLO, right? We want to go step by step, see the infrastructure work, see that everything works, and we don't want to risk capital of the people. So I think that the first use case will be, okay, I want to go 2x long on my Bitcoin. It's a feature we call multiply, and you have it. Of course, now I can definitely share my screen, but
yeah, did you want to share your screen?
Yeah, let me go through so we can see
so let's
what
do
we are
this.
cooking.
Add to screen. There you go.
So
don't expose your private keys there. Keep your private keys hidden.
They are safe in your Marina wallet. So one of the first product, we call it Multiply. So the idea is that it's not there yet, but that will be open as soon we uplift the limit. The idea will be use your own Bitcoin on your Lightning wallet. You basically scan it, you do a summary swap, and this is done automatically for you. So you're not doing it, you're just paying a Lightning invoice. You basically deposit, everything goes on your covenants on Liquid, and then the amount of Bitcoin, let's say you get 100 FUJI USD out of, I don't know, 200 worth of Bitcoin put down. With 100 FUJI USD, you buy $100 worth of Bitcoin on the market. So you basically sell right away your FUJI USD. And those Bitcoin are free floating. You can get back to your Lightning wallet with another Lightning wallet back from your browser, back to your Lightning wallet. So this will basically be, okay, I have my Lightning wallet, I go long, I only have my collateral, which is on a smart contract or Liquid, but then all the remaining Bitcoin are my wallet. So this will be one of the first products built on top of our protocol. So we can offer you a 2x long leverage on your own Bitcoin. So this will be the first idea. The second one, which I think you were showing already on our pitch deck, actually, what we are building is more also a consumer kind of retail kind of offering. We are already like in conversation with a couple of partners to offer you prepaid Visa card. So let's say that you are in a jurisdiction like US or like Italy, for example, right? Where whenever you want to spend your sats, whenever you want to spend your Bitcoin, you need to pay capital gain taxes. But this way you can borrow, you can get a line of credit using the FUJI protocol. So again, no custodians. And with that FUJI USD, you can buy these prepaid virtual cards and you can spend anywhere. So you can really live out of Bitcoin this way without worrying about paying capital gain taxes. So this will definitely be the second arrow in our chest that we want to release to more consumer retailers, so to speak.
Okay, there's so many questions. All right, so first, let's go ahead and go with your licensing and corporation status, which might be interesting for any founder or builder out there that's building in financial services. You've made a decision to incorporate in Dubai. Okay.
Absolutely.
You didn't go the Delaware C route that many people do. So what's up with the license here? Where are you going to be able to operate? Geographies? How does that look? Because in this operation choke point, so many companies are having trouble and it's been very hard, but you're there now. So what's up with that?
Yeah, I think that we took like the long route. We did the thing, I would say, very prudent way. And first, instead of rolling out this as a centralized offering, or I would say still non-custodial, something we just offer out of multi-sig or something, is that the first we researched how to do this without our intervention. So first we did the protocol. Second, we did the reference implementation, and we're not taking any money out of it, right? So liquidators or lenders, so to speak, are basically taking the minting fee. So as a software, open source software, we put out there the open source software. Anybody can literally build a commercial solution on top of it, and we will be very happy to do that. So on a side, we said, okay, this is totally open. Everything is out there. So we don't need that. You don't need us to offer and go ahead with the product. So this is the first step. So I would say combination of legal innovation and, having a protocol that nobody can touch it. There is no protocol fee, so we're not getting anything out of it. So we are building, and we are in the open competition with anybody. We are building with FUJI Labs, which is incorporated in Dubai. we're actually building the product that I showed to you. So we are going to offer arbitrage, we're going to offer nice mobile app. So we are going to offer product on top of it. And of course, with that product, we will, of course, eventually follow all regulation that need to be follow on the product on top of it. But the thing is, the protocol is not capture. The protocol is anybody can use it, anybody can be built on top of it. In Dubai, it's very interesting because they're very straightforward in terms of regulations and the new licenses that has been promoted by the government, and is not a chance that why the major exchange, let's say from Binance to now Coinbase International, are trying to move out of other jurisdiction and are incorporating in Dubai, because the government is very straightforward, is worked very hard in offering the right jurisdiction and the right legal framework to operate for this type of company. So FUJI Labs is incorporated there. We are in the MCC, which is the free zone dedicated to commodity trading. And we also have a blockchain development license. That's what they call. And also we are in a fast track list to obtain the virtual asset license for trading exchange. We don't need that because, again, we are building on Bitcoin. It's not a security. FUJI is not a security, of course, but we are, of course, in a fast track to obtain any type of legislation on top of it as a FUJI Labs to offer also more custodial products on top of it, which, of course, are not undermining the underlying protocol, which is open and anybody can use it.
So before we go to a demo, or at least attempt to here, I want to just illustrate that right now, Liquid, it's live, but you also have some stuff here with as far as Taro and RGB. So you're planning on further integrations?
Yeah, we see Liquid as a great smart contract platform. It's the only way at the moment in the Bitcoin space where we can use these new covenants, capabilities, new asset issuance. So we think was the right platform to start and to launch. But actually, we recognize that any other tokenization technology happening on top of Bitcoin is where FUJI needs to be. So if you want a Bitcoin-backed stablecoin that doesn't require any centralized party or any peg with the US dollar, we really think we should be everywhere. And we're already working with the RGB team to make a bridge. So the idea is that we keep using Liquid. And the first phase, we keep using Liquid as a, we'll say, smart contract execution environment. And then RGB, there will be a FUJI on RGB, a FUJI on Taro. So there will be bridges between Liquid and this and the Bitcoin tokenization technology like Taro and RGB. The next step will be try to understand if there will be some wrapped Bitcoin on Taro or RGB, so we can also move the logic of the covenants of Liquid also moving directly on the Bitcoin main chain. Of course, this is like more long, far-fetched. We want to be FUJI, the asset, to be also on top and also on RGB.
All right, so let's keep it moving because there's a lot to cover. All right, so this market is huge. And there's many different markets that you can look at. You can look at overall crypto lending. You can look at Bitcoin backed. You can look at stable coins in general. You have some pretty lofty projections here as far as FUS making it on the coin market cap one of these days and being up there. And I also want to go and chat about this revenue model, okay, and how your fees play into this. So first off, do you want to talk a little bit about the size and how you came to some of these projections here?
Yes, absolutely. I think we started with the market that makes sense, since being an over collateralized lending, we cannot go on banking lending where they're using printed money, they use fiat money, so they literally don't have any collateral in the back. So just focusing on the crypto lending sphere, we can see the amount of the market is pretty big already, and we can see how it can grow on a compound annual growth of almost 25%. And we really think that can grow very quickly. Just looking at the Bitcoin backed, we see how Bitcoin is king in general because it's the best collateral at all, like compared to other altcoin out there. But still, like the Bitcoin backed market, we think we can capture the 10%, which is, of course, a great claim to say we can capture the 10% of the current backed market. But we really think that thanks to our innovation, thanks to the incredible difference of the current solution, where we basically are capital efficient, but still we protect you from re-hypothecation, I think we can definitely grow very quickly in the Bitcoiners, or say Bitcoiner user base.
So, I'm sorry. I was going to say, so To keep it moving here, you have an example, which is a 10% APR. So that's by the liquidity provider, right? That's part of their yield. And then your model, if I'm understanding this correctly, is 20% of that overall interest paid. Is that right?
Exactly. So we will make it super easy for liquidators to have an infrastructure where they can join and can pool their funds to exploit liquidation when they're going to happen. And in exchange of this nice user experience and all this infrastructure tooling from Oracle, very fast Oracle, and all this extra guarantee that we can give them, we are going to take a 20% fee on their interest that they make on top of their capital. And this is pretty standard, I would say, on banking lending business. So we can say, let's say that this is our market, and let's say that the average percentage rate on loans, this is currently in the market, is 10%, let's say, for over collateralized lending. We can definitely see how this business can quickly and very rapidly can make revenue if we can, of course, capture that 10% of market. And this is our projection, of course, but we are really confident that thanks to this innovation, we can disrupt or at least capture a substantial portion of it.
All right, cool. As promised, we're going to keep it moving. Let's touch on the team, and then maybe we can have fun with a little demo, and I'll just let you drive real quick. Some of those partnerships, day one, we didn't really go over it, but Bitfinex, TDEX, I don't know, XDEX. There's a couple of others. I don't know if you can talk about them. We've discussed them privately, but there will be liquidity options to do what you wish with your FUJI USD. I just wanted to make sure that's clear to everyone on the call here. And we're going to go in briefly on Marco and Simone. These are the Volpem Ventures guys, okay? They are basically the de facto PM for Blockstream that have built many liquid products, right? If you've used any of these, if you're in the liquid fold, okay, you'll notice that they're heavily involved. Hey, shout out to Kyle Fry for anyone who invested in digital. Love Kyle. Okay, and we have Wiz in there. We have a lot of smart people in here. So on the technology board, yours truly. Look at this guy right here, this Italian stallion. Of course, everyone loves Max too. And we have Samson. So why would Samson get involved with your project here? What is that about? It shows that he's an advisor. So what's up?
Yeah, I think it's very important to say, yeah, as I said, I sit on the technology board for Liquid since a while, and Open Ventures, my parent company, definitely built a lot of foundational primitives for the Liquid sidechain. And yeah, with my partner, we've been very involved in a lot of projects so far. I think I want to touch also on the legal aspect. Max Caruso leads one of the biggest New York law firm that is advising SEC on matters of stablecoins. So I think we are very well covered on that side. And the thing Samson, what he's recognizing is the fact that this platform is starting with a dollar-backed stablecoin, but I think it fits very well with his vision of nation-state Bitcoin adoption to make sure that this platform can be used for any other synthetic asset out there. So you can go in any poor country and give them something more familiar than the dollar or a basket of currency, right? So FUJI can literally create a basket, a stable coin that tracks a basket of currencies. So we can also get out of the dollar dominance as well. So I think Samson see a lot of synergies in terms of how this can help the global south and the Bitcoin state adoption. And I want to mention also Andrew from BTC Pay Server, which we co-wrote the paper in 2 years ago, and also has been giving us a lot of feedback in terms of non-custodial merchant adoption, where, of course, FUJI is going to look at.
All right, so that's enough of me, and I think we've been talking for quite a while. We could probably talk all day here about a number of things, right? But we got to keep it moving. And you're busy working. So I don't know if you have any ability here or to do a demo and take the wheel and see what we can do here. But do you want to showcase some of this stuff?
Yeah, let's do it. As I said, now I wish we could have done with the real FUJI USD on the main network, but some whale decided to not to. In general, people were so excited since 6 months or so far. So I expected that 5,000 FUJI USD is just the bare minimum to start with. So let's go and test it. So let's play it safe. As you can see here, I have my dashboard. And there is no login, there is no sign up, there is no email, there is no nothing. I have my nice Marina wallet with some liquid Bitcoin in it. We are in testnet. And the idea is that now let's go borrow and let's see what's happened. So first, let me connect my Marina.
Now, your Marina wallet is your login, and I played around previously in the beta. The Marina is the login, but the Marina wallet is not a Bitcoin wallet. It's just liquid assets and just liquid assets, correct?
Exactly. It's where your FUJI will live. At the moment, you will use this eventually to trade, to pay back your loans, to top up your collateral. So it's a nice way to have a browser extension to keep your private key safe out of the browser and to store your stuff and things like that. So we can go here, we can mint, let's say, want to mint 10 bucks. Okay, let's take 10 bucks of FUJI USD. I can decide my collateral ratio, right? Let's play it safe. Let's do 200%, right? And this is the amount of collateral we need to put there, right? Which is more than the value of $10. And everything will be, and I can see my expiration dates.
Can you zoom in on that for us,
Sure.
Marco? Just that top right, that box there.
Sorry, say it again.
That box in the top right. Can you zoom in on what that says? It's hard for me to see it. Maybe everyone else can see it.
Yeah, you're right. Is it? Oh, let me go. Is this good enough? So we are saying we have the borrow FUJI USD, right? The borrow amount, 10 FUJI USD here. The current price that we are using now from the Oracle. We have our liquidation price. So we know that if the price of Bitcoin is going under or is reaching this amount, we're going to get liquidated. And fear you not, you can either redeem it early on or you can top up, adding more Bitcoin. So this, of course, can be done at any time. This is the amount of collateral, right, that we need to lock down at this moment and an expiration date. And after this, if you want to keep it open, you need to pay again the minting fee.
Let's pause right there. So at this expiration date, let's just say that you took your 10 bucks and then you took me out to lunch and you never went back here again. Okay, since there's no registration process, identification, there's no email alerts, or maybe there is, I don't know, I don't think so. That date rolls around, I forget that I had this $10 contract out. What happens on that date if I do nothing?
Yeah, the liquidator basically will confiscate your collateral, and the treasury, which is at the moment is us, can claim this, but this is like to force you to behave in the right way, meaning that, hey, pay back your loan, right? So you get the money out and people want to be paid back. So it's basically sort of liquidation. One thing we want to do for our customer is like saying, hey, if you basically pay us, we are going to either top up for you on your behalf, or we're going to monitor and alert you, sending push notification on your mobile app. This, of course, happen on top. We just monitor the chain, so we don't need to know your own private key or know anything about you. We just monitor the chain, we monitor the contract for you, and we offer this as a service to remember to do that. I think that this can also be done in another way. As I said before, not implemented yet, but the idea here, you can select, hey, I don't want to be bothered to pay every month, either with Lightning or whatever. Please, can I pay at the end when this contract will happen? So basically, you're going to accrue interest and will be get out from the covenant when you pay it back. So another way to make it easier will be to pay at the end instead to pay recurrent fee.
So that's what he's discussing is called FUJI Prime.
Yes, exactly. Will be a more prime offering for you to remember you about this, automatic top up, things like this.
All right, so you're ready.
Okay, so let's try Lightning, right? We are in a Lightning Ventures call, right? Okay, let me open here this testnet Lightning wallet. Let's see if I have some funds to me. Okay, we have enough testnet Lightning. Okay, let's do Lightning stuff. Okay, now we can integrate with Albi and all of that, of course, in mainnet. Let's get a Lightning invoice. So what happened here is basically a summary swap happening through Bolts, which is a summary swap exchange that a lot of people may or may not know. And we're using them directly in the browser. So I copy this invoice. So I need to pay this amount. Of course, there is a little bit of fee for bolts for the Lightning offering. So let's say I can scan it with my Lightning wallet, any Lightning wallet, really. Let's see if this works. It's testnet, so sometime testnet. Okay, done. So the browser received the payment. The browser is actually creating the covenant transaction and the contract execution. So this happened. So we got issued. Let's give you in a minute the Liquid testnet Explorer is a bit flaky sometimes. So we are going to see soon our FUJI USD here. Okay, give it a second, trust me. Okay, we have our 10 FUJI USD in Marina here, right? So it's unconfirmed, the transaction is happening. So let's give it a couple of seconds more. Yeah, blockchain need to fix this, right? So if there is a blockchain folk in the call, please fix the test, fix it, because Marina saw it. You guys didn't saw it yet. Okay, let's confirm. Come on. We have it here. Come on. We have it here, our 10 FUJI USD. I want to see it. Okay, let's go to Mempool. All right, Mempool works. Okay, let's see very quickly this transaction so people understand what happened under the hood. So the first output here, this is a taproot address on Liquid, is holding our collateral, right? So it's holding our BTC here. And then we got issued in the same exact transaction in an atomic way, so nobody could steal it, got issued our 10 FUJI USD, right? This is FUJI USD, is recognized by the Explorer, and we got it right here in our, say, 26th of May, we got here our 10 FUJI USD. And then we have a variations token going back. This is just a technicality on how issuance work on the Liquid, so I will not touch on that. So this address, this one is a taproot address that basically grants me in future, I can always burn this 10 FUJI USD gave to me to get back this Bitcoin, right? This 74,000 sats. So let's go back to the dashboard. In the dashboard here, we can see we have the 10 FUJI USD contract tracked. We see the expiration time, and we can check how much is left. We can check the liquidation price, the status, and we can close it, right? We can renew it eventually. We can manage collateral. This is coming to the mainnet version. And yeah, you can see your activity, your contract is being redeemed, top up, or liquidated, or you can close it.
So you have $5,000 in the total pool at this point, right?
Yeah, let's go to the mainnet. Sorry.
And when do you think that app is going to be released?
We have, yeah, as you said, a limit reached. So at the moment we are imposing a limit just for making sure there are no bugs and we don't want to rush more than that. I think that we are planning during the next month, during June, to increase a little bit the limit and still having our step-by-step approach and increasing, I don't know, maybe 1 Bitcoin. That's also still to be defined, but we can definitely increase it to 1 Bitcoin, let's say, and see more folks playing with it and trying to take loans.
But why can't you just turn it on now? Just go nuts with it, man.
We are not Ethereum people, right? So we try to go step by step. I think that's better to be prudent and better to go step by step. I will definitely do it. There's no issue in doing that. I'm just saying a lot of pieces still need to go together. Nice apps, nice mobile apps or desktop app people can use. I think when all the pieces are there and we are confident and get audited and all these covenants are like something which is bulletproof, we will be more confident to keep it open and get people play with it fully.
All right, cool. Listen, so let's sum it up here because we're under an hour, but we're coming up to it. FUJI Money is an innovation. It's Bitcoin only, and it's solving for a non-custodial way to generate some yield for those who are sitting on Bitcoin and looking to make it a productive asset and don't want to manage 300 channels and forced closures and watchtowers and everything else in the world that comes along with that. Yield with Bitcoin has been great. It's just everyone's a scammer, right? So this is the first non-potential scamming option. There's a lot of stuff to learn here. There's a lot of stuff with Liquid and with federated pegs. okay, and the different types of contracts and RSK and liquid. And I'm no expert, but Marco definitely is. And it's really cool to see those integrations with Strike on mainnet and Albi. And I'm really excited to use it. And to my knowledge, there's nothing else that is out, that is available, that is tackling this problem. So it's super exciting. I wish Marco was a little more cavalier and just cranked this on, but it's slow and steady. Hopefully they'll start to increase that limit now that Bitcoin Miami is over. By the way, he did a great job in the pitch contest. That was a real tough category, and we were there cheering him on. But now that's over, I can't wait to see these limits slowly start to creep up and the exchange partnerships with FUSD really start coming online as there's more need for it. Okay. And loading debit cards directly in the app or through your FUSD, through your Fuji dashboard, all sorts of other cool integrations and things that you can do. They're all coming down the line, and we have those details in Lightning Ventures. So we try to do these videos when we're excited about a company and investing ourselves, and hopefully we can spread some of our conviction to some of those others around. Marco, in closing, do you have anything else that you want to touch on, want to say, or are you going to go back to building now and you're done with this?
I think we did a great job. And of course, as I said, there is a lot of to go deep dive in detail. If anybody wants to reach out and ask me more questions, I'm super, super glad to answer and to deep dive with you. I'm good with it and looking forward to increase the limits so have more people play with it.
All right, so it is May 26th now, and Marco will be in Prague. So
Yes,
meet him in person and grill him on all this stuff. He'll be there, and I'm looking forward to hanging out with him too there.
100%. Looking forward to it. Thank you.
All right, Marco, we'll see you.
Bye.